So I have actually had a. So let me just give you the context, right? I spent a lot of time in the US. I had no money. I was a struggling entrepreneur. I had a job there. I was making some money there, and so I kind of went all in at that point into this was during the dot com boom, and I was mostly a public market investor, buying stock on momentum. I was very young, so I felt nothing could go wrong with the world. That's how people are when they're young, and you think everything is going to quadruple and double and so on and so forth. So I was heavily indexed on public stocks. And in my mid 20s, I was a multimillionaire. I lost it all in the subsequent years, and I was kind of out of money. And then I started my entrepreneurial journey. I built up and sold a couple of companies, got some money. And so, two, three things I've done. That public market experience in the US left a big scar on me, right? And so I said for some time, I'm not going to do public market investing. Uh, and so I basically, when I came back from the US and started building my companies, and when I saw some capital come in, the first thing I did, and this is good old advice from dad, and a lot of people will tell you, especially all these modern finance experts, the finpreneurs will fuel or finfluencers, whatever you want to call them, that don't buy a house because the yield is 3% and blah, 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 and yada, yada, yada. But the first thing I did with the money that I had made is I bought a house. Okay. And uh, I can't advise you guys, you are independent, but I would say the same thing to my kids, right? The first time you make money, buy a house, right? Because it keeps a roof over your head, it gives you security. I think it's incredibly liberating. It gives you a lot of confidence. So I bought a house very close to my parents. And after that, I thought about what really I enjoy doing. Okay. I happened to stumble upon angel investing. I didn't know it was called angel investing. This was back in 2006, 2007. I just happened to stumble upon it. I thought angels was something you became when you died and went to heaven. At that point, there was no concept of angel investing in India. But I liked the term. And what I liked even more is the first investment that I made went on to become India's largest digital ad agency, and I became the largest shareholder, right, of that company. We had VCs and so. So I did really well in that. That journey for the early parts of that journey told me, look, there's something here which is very valuable. I had already learned my lessons in the public markets. So I started spending a lot of time with the startup ecosystem, which was very nascent at the time. We are talking pre-2010 or just around 2010, right? Just 15 years back, but very early days. And so I started spending more time there, and I just loved it just excited me. I felt passionate about it. And I thought the timing was right for India to build its tech ecosystem. So I invested most of the capital that I had or that I earned over the years into these companies. Just to give you a sense, I started with about 30 lakhs. And over the last 15 years, I have a portfolio which is worth a few hundred crores. But it's all come from that 30 lakhs. So, I caveated early on by saying I was fortunate. And the fortunate part is being at the right place at the right time, right? I was coming back into India, just as the tech cycle or the ecosystem was starting to take shape. I had already experienced it in the US, so I knew a thing or two. And hence, I don't advise it to anyone because fortune is something you can't plan. Right? During that time, I flirted with public markets again, and I lost money again. This was just pre-Lehman Brothers. So when I invest in public markets, is the time to get out. I'm like, the grandma who says, "कौन सा stock लेना चाहिए?" तो अब मतलब time हो गया निकलने का. So what it told me, it's a couple of things about myself. And you're probably looking for investment advice and stuff, but what I'm probably giving you are life lessons, or at least my experiences. What I learned is, I have extreme OCD. So if there is a live score tracker, I will keep looking at that score every 5 minutes. And public markets are a live score tracker, right? So I realized that about my personality. And I'm also late to the party when it comes to public market. And I also felt that as I get older, I should take care of my heart. Because public markets, when you have a live score tracker, can be pretty heavy on your heart. I realized that with private investing, मैं check लिखता हूँ, I write a check for 100 companies, and 10 years later or 5 years later, handful of them give me 20x, 50x, once in a while 1000x of my money. During that time, I don't know too much about what the score is, right? So I feel pretty good in terms of my heart doesn't take a lot of stress. So that kind of worked out for me. I stayed away from public markets through this period. I invested in private companies. I have invested over 300 companies and some property. And now some fixed income investments and some mutual funds. That's what it looks like now.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.